Super excited to have my good friend and partner, Sean Guerrera, on this morning to talk about the June housing update. Good morning, Sean.
Good morning, Mary. Thanks for having me.
My pleasure. So let's jump into it because mortgage rates is all the rage right now.
Yep.
Whether the Fed's going to raise them, what they're going to do, all that. Talk a little bit about mortgage rate and what has the history been, Sean?
Yeah, I mean, mortgage rates, there's always a spread between mortgage rates and the 10-year treasury. And that's kind of how mortgage companies track where their rates should be. Past couple weeks, past couple months, we've been hovering around sevens, but we've started to see some good news with inflation starting to come to a plateau here. And that's boded well for mortgage rates over the past couple weeks. So they're starting to come down a little bit.
So they've always been like an average spread of 1.72. And in the last January through where we are today in June, how has that spread been affected? As it, in this slide, it talks about it was 2.7 to 3.2.
Yep.
That's crazy, right?
That spread certainly went up a little bit. And 1.72, that's the average. If we get to 2, that's kind of where you want to be. Like that's the sweet spot is right around 2. So as you can see here, 3.23, it's a little bit high.
Right.
So as we creep closer back to a 2-point spread between the 10-year treasury and mortgage rates, that's when we'll start to see rates kind of settle out.
Fabulous. So what does George, I'm sorry, your last name is Ritu, chief economist from KCM. What's he saying?
George says the only times the spread approached or exceeded 300 basis points were during periods of high inflation or economic volatility, like those seen in the early 1980s or the great financial crisis of 2008, 2009. And basis points, just for the people at home, when it's 300, you could think of 3 points on a mortgage.
Okay.
Right? So 100 points equals 1 percentage point.
Yeah, which can be crazy. And to kind of point this even further, when you look at this slide, the spread between and what he was talking about in the 80s, that happened twice. And in 10 we're going to call it what? The great financial recession, I don't know what we're calling it these days. And then again now.
Right.
I mean, so of course, interest rates cause people to buy houses quickly, and they were super low in those crazy years. Talk about what Odetta Kushi from First American, the deputy chief economist, is saying.
Yeah, Odetta says that it's reasonable to assume that the spread and therefore mortgage rates will retreat in the second half of the year if the Fed takes its foot off the monetary tightening pedal and provides investors with more certainty. However, it's unlikely that the spread will return to its historical average of 170 basis points, as some risks are here to stay. Right. So that's why I said 200 will be in a good spot.
That's fabulous. So what does that do? Like, I love the slides, which shows what if it were 1.72, what if it were 2.25, what if it were 3.2, and the mortgage rates, would that be actually excellent for you getting mortgages and for people buying?
It will be great for mortgage companies.
Yeah.
It will also be great for home buyers.
Totally.
What we see in the data that we track is at that the data over the past couple of years.
Sure.
When we approach a 5% rate, the demand from buyers skyrockets. Right. So if you're looking to buy now, keep in mind that if you wait for rates to come down, so is everybody else, and the market's going to be super competitive then.
You bring up a good point, because one of the things that we really saw was buyer fatigue in 2020, end of 2021, 22, because there were all these multiple offers. Everybody was jumping in because interest rates were so low. Well, if we get back to that again, Sean, I submit our markets are going to go back that way. Now, in our market here in Southwest Florida, we do have some areas that are still in multiple offers. And across the country, there are areas that are in multiple offers. Don't get me wrong. But as these rates come down, it becomes a bigger seller's market.
Totally. And there's going to be a lot more buyers that are coming off the sidelines.
Yeah.
We're live in 20 states. We do mortgages in 20 states. We're licensed in 35. We're already seeing the multiple offers again. Like you said, it's super competitive out there even now.
Yeah. And in summer, everywhere else in the world, is their high season. In our world, its high season is January through Easter in the winter.
Yep.
From that perspective. So, for those of you that are millennials or, haven't owned 100 homes like many of our clients have down here in the second home market,
Right.
Let's not forget, even if the interest rate is high, you're still building equity in that home. You still are building wealth. You're still building long-term savings, which, I think are huge benefits of home ownership, which we all think about. And the tax benefits, again, for those out there that maybe don't really know the difference in the tax benefits, talk about a couple of those.
Yeah, well, with tax benefits, you pay taxes to the local town or city that you're in, and those are all things that can be written off and considered at the end of the year when you're working with your accountant or TurboTax. The thing that I like personally about the equity building in a home is that it pretty steadily goes like this
up
over the course of several years, whereas when I open my Schwab account or my cryptocurrency account, that thing goes like this, and that's what puts the gray hairs on the side of the head.
Yeah, it does, doesn't it? From that perspective, you bring up a good point because your home is an investment, and as an agent, I rarely like to move. It's sad to say I've been in this home for 20 years.
Yep.
And to watch what we bought it for and what it's worth now is incredible.
Totally.
Just incredible. And it is part of my asset portfolio that a large part of my assets are in my home from that perspective. I love this as well. Homeownership remains number one feature of American dream. 74% of people said, according to the source was Bankrate, 74% said it's part of their American dream. Where look at what's happened to a college degree. 33%. Now, maybe that's millennials that are bringing that down. Maybe it's people like me with gray hair that, speaking of gray hair, colored, I might add, that know that maybe the college degree didn't get you where you wanted. Maybe it's, different people that are saying things. Gary Vee that's like thinks no college education is there. I don't know. But it's interesting to me, Sean, that 74% still say, over retirement.
Yeah. Well, you know what it sticks out to me here is owning a home will help you retire.
Yeah.
Because home ownership is still the number one way to build wealth in this country. So most people want number one, and number one helps you with number two. And, a successful career can be worked into how much money you're making every time you move and you upsize and the wealth you're building. So they all kind of correlate. And a college degree, I have one, but
I have one too.
I don't use it really.
I don't either. Yeah.
So it is what it is.
Yeah, for sure. I love that. So best long-term investment, we've got real estate versus gold versus, bonds. Real estate's dirt is the best way to build long-term.
And this slide is exactly what I've been saying for the past couple minutes here.
Yeah.
It's just consistent. You can trust that it's going to work.
Right.
Meaning your investment's going to work. It doesn't have the volatility of some of those other investments. Not that those other ones are bad, but if you want something reliable, real estate's the way to go.
It is. It is for sure. So, but consumer confidence in home prices weakened towards the end of 2022. And we are hearing this in conversations that we're having with our clients. Yes. I hear people say prices are going to go down. And the next question I say, what? Help me understand what makes you think that. I don't know. I just think that. And 37% always think that too, clearly based on this poll. But
can I say why it's not going to go down?
Yeah. Tell us.
Well, one, if you think they're going to go down, can you point out something else where the price is going down? Certainly is not gas. It's not milk. It's not eggs.
Right.
When interest rates do come down,
yep.
Right, the buyer demand is going to go up, which means home prices are going to continue to go up.
Right. And we are short homes. I mean, let's face it. We have these millennials that are in the buying, coming into the buying years and we're short on homes because in 10, 11, 12, 15, et cetera, we weren't building as many properties. So we really are short from that perspective. But let's talk about this. What does the Center for Real Studies at Wichita State University say?
This one's a long one. The median sale price measures the middle price of homes that sold, meaning that half of the homes sold for a higher price and half sold for less. It's not very useful for measuring home price appreciation because it is affected by the composition of homes that have sold. So for example, if more lower price homes have sold recently, the median sale price would decline because the middle home is now the lower priced home. Even the value of each individual home is rising.
Yeah. Yeah. And it can really sway. I mean, in our market, if you have a lot of super luxury,
Yep.
The top one pulls out, but what if you have a whole bunch of super luxury, or the market shifts in the summer, and that's where our primary folks are actually looking and buying. But so let's look at a few home price movements and what is actually happening. Now, this is percent change from month over month, seasonality adjusted by 3 of the top analysts. And they're all saying, because you see, I think it's a busy slide,
Yep.
July through January, they saw prices come down. Some of them saw them go up in January a little bit, but they're all coming back up. So, and the amount they went down was really little.
You can barely see it on some of those. There's barely a piece of red where it went down. Very insignificant.
Very insignificant. So, and let's name what happened in COVID as, quote, the unicorn years, shall we? What happened of increases in prices and all the other crazy things that happened, I don't know that we'll ever see again in my lifetime, nor in yours, unless some crazy thing happens in the world. But no one expected that. So when you look at that and you look at home appreciation, now the home appreciation was higher here in Southwest Florida, but in those unicorn years, it was 11 to 18% on those 2 years. And where they're normally in that 4, 5, 6, 7% across the nation. Yep. And you continue to look at that, and it's homes for sale dropped significantly. They still across the nation are almost half of what they were in 2020. So we still don't have a lot of homes out there, but we are higher than we were in the unicorn years, and we're coming up.
Yep.
Months of inventory. Let's face it. For those of you who don't know, a stable market is 6 to 7 months of inventory. Mm-hmm. Anything below 6 months of inventory, you're moving into a seller's market. Anything above is a buyer's market. When I started this, we were coming out of that 2010 crazy time, right? Yep. It was definitely a buyer's market because there was a lot of inventory and nobody really wanted to buy from that perspective. So in 21 and 22, again, 2 months of inventory where they've nationwide have typically been 4.
Yep.
Last but not least, fewer foreclosures during the unicorn years. Now, when people tell me foreclosures are, they're coming up, what say you?
Not really. I mean, sure, compared to the unicorn years, but as we discussed, those years aren't happening again. Look at back to 2017, 2018, we're at half. We're at half the foreclosures.
Right.
Versus a regular market, right? So the foreclosures, I mean, sure, it's greater than the last couple years, but that just means it's getting back to normal.
Yes, getting back to normal. And God forbid, if you are in a foreclosure situation, please call us, because the good news is that your house is probably worth a lot more than you paid for it. And we can get you out of that without hurting your credit. And, we're here, lots of things happen. Health happens, job loss, whatever. Even though we're not seeing a lot of that, it can happen to you. So we're here. The two of us are here for you. Housing market in Southwest Florida. I love to give a couple of slides, Sean. I've given this slide over the all of last year in December and into January, a little bit of February. But if you look at, now I look at average price versus median, because our market is, we can have some big bad boys and we can have a lot of little ones. So throwing out the top and the bottom doesn't really make sense a lot in our market. Right. But this is month over month. So January of 22 versus January of 21. And if you look at the green, price change has been up. You started to see it come down in the summer, which comes down typically in the summer. But the other thing we had was interest rates went up and the stock market went down. And so in April and May, when we were coming off the freeway, we kind of came way slow. We, like in our neck of the woods, we came from the freeway on to like 951 and you went, you're going to get a ticket. You can see we had low inventory month over month of 21 to 22, and that's why it's in red and below. But really, if you look at September, October, and November, guess what? We just came off of a storm.
Yep.
So, of course, things are going to change. When we look at 22, 23, of course, we had super low inventory in January because, let's face it, we went through a catastrophic event and people lost their homes.
Yep.
They lost their homes. They couldn't put them on the market. There's nothing to sell. They're kind of reeling from it. So, of course, in January, still reeling from that. But look, we would normally have come up in inventory in the fall. That's when we rise.
Yep.
And that's when we sell, January through Easter. Now, I sell all year long, in case you were curious. But we have all year long. But we have buyers, influx of buyers that come in winter season.
Yep.
So you're seeing that. Now, the interesting thing that you see in March, April, May is the prices went down. Those should have negative numbers instead of just positive by that percent. And I think that's just a little fluctuation in what's happening in the market and some better deals that were had by folks. Because now it's April, they've come off the storm. People really wanted to get out of their houses for those that just got afraid. So again, we would see that in the summer. I think we just saw it a little earlier.
Well, and one thing to point out here with the price decrease is that had to do with higher interest rates. So as interest rates go up, right, you have people that go and sit on the sideline. You have some people who are still in the market.
Right.
Those people in the market have a better chance to negotiate, right, because there's less buyer demand. So that has to do with a little bit of that decrease in price.
Yeah.
Again, as interest rates come down, if and when they hit fives, you would see the opposite. And those blue lines would actually be going above the black line.
I love that. I love that you said that because that is a great point that that we need to remember when the interest rates come down, which they will.
Yep.
Homes for sale. Look at the unicorn. They're also in fuchsia, which is what Keeping Current Matters, where we get all of our data from. Look at, green is Lee County and Collier County is in blue with the units. But I think, the number of homes you can see from that perspective of we are up by 34% in Collier County and up by 72% for 2023 of May. So I'm looking back, that's the end of May, what that looks like. Well, May is a tough month because keep in mind, we start to see more inventory go in Lee County because that's the primary home. And Collier County, we're still a little bit sub where we were in 22. A little bit higher than we were in 21 and 22.
Yeah. And it just dawned on me that fuchsia is oddly similar to Bartos Group pink there.
Oh, right. I didn't put the fuchsia in Keeping Current Matters, but it is.
but when it comes to homes for sale, people still have to move, right? There are less people who are putting their house in the market because they may be in a 3 or 4% interest rate. And why would they want to go into a 7% interest rate on the new purpose, but on the new purchase, but houses still come on the market and just go super quick.
Yes, that's right. That's right. You're spot on. I just wanted to share one last slide with you because I think it's relevant. Months of inventory. You see Marco Island is up to just a little over 7 months of inventory. Yep. We're still in a balanced market. The rest are, when you look at the May of 2023 as those little arrows, when you look at the rest of them, yes, the percentage is really high, but we're still only at 2.6 or 3.4 months. We are still based on 1 month of inventory, yes, we're up, but we're still in a huge seller's market. So, again, people that are motivated will give better prices if there are not multiple offers out there and they've been on the market for a while.
And that's also why it's important for them to connect with somebody like you and then potentially somebody like myself early on.
Yeah.
Because once you find the house that you like, there's going to be other people interested in it, and you've got to be ready to move quick.
Yes, you sure do. So our last slide, because you got to stay tuned for more stuff that Sean is going to give you on a few products that they have and some other videos we're going to do. But my question to you, Sean, at the end of all these housing updates, is it time to move?
It's always time to move, right? It just depends on each individual's situation.
Yes.
But if you've got a good reason, as long as you're not just buying to buy.
Right.
If you've got a good reason, whether it's an investment, a second home, or a primary residence, and you've got to upsize,
Right. Or
it's always time to
downsize.
move, because everything we just discussed is long-term investment in real estate is
Yeah.
always the way to go.
All right. So until next time, I'm Mary Bartos with the Bartos Group of Premier Plus, and my partner and friend.
Sean Guerra, Director of Business Development at Tomo.
Look forward to seeing you here next time.